So today we saw a lot of selling pressure take place with Tesla stock and the overall market, but this was honestly expected. See, this morning I shared with the Pusher Profit private group at 9:04 a.m. that markets faced significant selling pressure yesterday, catching many off guard who anticipated a rally during CPI week. While such expectations aren't entirely off base, broad assumptions aren't suitable for precise analysis under current circumstances. Now, I want to clarify that my overarching view for this week has been that it's most likely going to be a lot of selling, but if we do have some positive data coming from the CPI report, which we're going to go ahead and touch a little bit further in this video, well, that could present an opportunity for a bounce. However, that doesn't mean that just anywhere in the week we are going to have a bounce. My overarching view, again, was that things were going to continue selling off until we perhaps had positive data from the CPI report. Now, I also mentioned in this morning's daily briefing that Moody's cut or downgrade for the regional banks is definitely something that is noteworthy. However, I mentioned that while Moody's influence may contribute to selling pressure, this information isn't necessarily new to the public. The challenges facing regional banks, including distress and near failures, have been evident for months. Arguably, this downgrade could have been issued back in March or April, given the evident decline in conditions. Nevertheless, I said it adds to the negative factor in an already correcting market. Then I went on and said that on a brighter note, once selling stabilizes, there are factors hinting at a positive market rebound, right? And so in this video, I want to go ahead and go over a couple of things in regards to the overall economy, but also Tesla stock. Now, pretty much everyone is aware that the CPI report, or the gauge on inflation, is coming up tomorrow morning. And we've recently have been seeing inflation slightly trickle down each reading. Now, as I often state, there's a bunch of nuance in regards to how you go through these reports. And so one of the things that we notably want to really look through when it comes to the CPI report is something that you may have noticed if you recently went to one of your local gas stations. For example, gas prices has significantly risen in the last few weeks, right? And so I know that on this channel, I typically talk about Tesla stock. And so I understand that a lot of the viewers who watch my channel may not even own an internal combustion engine, and maybe you only own an EV, and that's completely fine. In fact, I actually applaud that. But one of the things that we have to understand is the ramifications that high gas prices have on the overall economy. And so what we saw a lot of going in the beginning of this year was seeing that energy significantly was decreasing while still seeing a little bit of stickiness in core inflation, right? And I know that core inflation is what the Federal Reserve absolutely pays attention to, but we also have to understand that headline CPI, headline inflation, also still does matter, because of course it's a leading indicator to core inflations. And so what we absolutely want to see for tomorrow's CPI reading is to see that shelter, something that has been significantly sticky, is coming down, and not see too much of an uptrend when it comes to the headline CPI of just looking at the volatile energy sections. But with that said, I want to go ahead and hop into my laptop and kind of just discuss Tesla stock a bit further as we head into tomorrow. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and we see yet again another big red candle. In fact, if we zoom into a 5-minute time frame, we see that overall it was a bloody day. In fact, it was pretty much just going straight down. Now, I know, yeah, we consolidated towards the middle of the day, we pushed up, but the overall trend was pretty much very bearish. In fact, if we map it out, we fell down about 3.6%. So not an easy day for the bulls. Now, this was also very similar to what happened to the overall market. We had a very bloody day. Now, obviously, it varies slightly, right? We did have a big comeback towards the middle of the day, but we still closed lower. And so that's 2 consecutive days of selling off. Now, I know that may confuse some individuals, because if you look at yesterday, well, you see, hey, we opened over here and we actually closed higher. So yesterday was a green day, right? We had this massive push up, especially towards the early beginning trading session of yesterday. But if you zoom out, actually, right, you'll see that we closed higher, right, on the 7th. We open and close lower on the 8th. And then we go ahead and close even lower on the 9th. So it's just like 2 days back to back of closing lower, despite, obviously the 8th being a very bullish day. And so that's obviously showing us that there's been a lot of pain in the overall markets. Now, what have I been saying to the Push for Profit private group, but also, publicly later on YouTube. Well, one of the things I've been saying is, when we have this much selling pressure, well, something like a positive CPI read can be a catalyst event that pushes us up. But again, the CPI report isn't just looking at the headline number. We obviously want to see what's actually moving in the overall CPI report. I'm going to go ahead and head back to Tesla because I want to talk about a few things over here. But, looking back at the CPI report, I mean, the other day I was driving and gas, and, guys, you have to understand I'm located in the South. Gas was $3.90. I mean, I don't know where gas is around where you guys are at, but that's very high for the local area that I'm in, right? And so that's a big concern. Right, so why are we seeing energy and crude oil futures pretty much start to trend up higher? Well, we saw that Saudi Arabia and both Russia are both stifling production, and so that's having a huge implication on the prices of crude oil, just overall what you're paying at the pump, right? And so that's not good. Now, I know we started off, I believe it was in 2021, if I'm not mistaken, when we first started having the war with Russia and Ukraine, which obviously caused a huge spike in energy. And then we saw Joe Biden pretty much deplete the oil reserves to go ahead and reduce the prices for oil. And, we saw gas come down, right? And that was decent, obviously that's good. But we're starting to see the trend reverse. And so that's scary because the thing is, although food and energy, yes, it's volatile. Yes, it's the headline CPI report. That could obviously lead everything else to start going up higher as well, right? And so that's a huge concern. And so that's why I say tomorrow, what we absolutely want to see in the CPI report is we want to see not only energy, right, not go up too high, right? Just only maybe a bit, right? Because we're already expecting the CPI report to come in slightly higher than last report, right? In fact, if we, I told the Push and Profit private group the estimates. Goldman Sachs 3.2%. We have J.P. Morgan 3.4%. We have Citibank 3.3%. So the medium forecast is 3.3% for the CPI report, right? And so what we want to see is that, okay, energy doesn't get too hot, but we also want to finally start seeing more of a cool off with shelter. And so if we have more of a cool off with shelter, we see energy doesn't go up too high, well, that could be the catalyst event that finally pushes Tesla up just in the short term, right? Just in the short term. My overarching view is still bearish on the long term, right? And I've been saying this for quite a while, and I know it upsets a lot of people that watch this channel. Oh, you're bearish on Tesla, but then you say you're bullish on Tesla. What are you saying? I'm bullish on Tesla in the long term. In my long-term portfolio, which I don't sell any Tesla, or I'm not selling any Tesla as of now, I'm bullish for Tesla going into 2025, 2030, and the reason is really just the fundamentals. Now, we had Rivian actually do their earnings, and it was quite surprising that they weren't too bad, right? In comparison to Lucid, which was just an abomination. I don't think Lucid is going to be here, in 6 years. But Rivian could be a potential threat for Tesla. Not now. Let's be clear, right? I'm just talking about the EV space. Obviously, Tesla has a lot more in its product line that could definitely hold Tesla to a higher valuation, right? Obviously, the main thing is autonomous driving, and then of course, the next thing is not robo taxis, the humanoids, right? I couldn't think of the name. The robots, right? That could help the labor force. But that's not even priced into Tesla as of yet, right? Because there's no way to put a valuation on that as of now for Tesla at all. And so, there is a lot more optimism for Tesla in the future for 2025 and 2030, or going a little bit even beyond that. But in the short term, I've been saying that I really want to keep watching Tesla and see what happens. Although we may have a bounce, I still think that it's a possibility that we may hit these low $200 levels, right? And also, I do want to let you guys know, I didn't say it, I'm still fighting a flu, so that's why sometimes I pronounce some words just extremely silly right now, just because it's very hard to talk with a stuffy nose. But anyways, one of the reasons why I say, it's likely that we could see Tesla hit these low $200 levels. Not saying it's guaranteed, but likely is simply because, well, we're getting rejected off this descending trend line. We see that it's an area where there's a lot of volume relative to price. In the past, it's been a support and it's been a resistance. And so we're still seeing this. And I know when I talked about it in the beginning, some individuals thought I was crazy talking about Tesla going to the low 200s. We're already halfway there, right? Because, we started with the earnings already at the high 200s. We're already at, the mid 200s, right? So that's about 17%. An additional, 15%, or not even, an additional like 16% will already take us there. And so we may, rally in the short term, and that's good. And if you're a short-term trader, you could take advantage of that. But I still don't think that overall the market's going to rebound and make all-time highs, right? I don't think that's likely at all. In fact, I think that as we go into the next quarter, we're going to see earnings, actually fail even more. We saw 90% of the companies for the S&P 500 already reported their earnings, and I believe about 80% of them beat their expectations, right? So we had, a few misses and a lot of hits. But a lot of these companies that beat their expectations, we have to understand that, they were already revised downwards, right? Because companies give out a few hints and then analysts go ahead and they revise their expectations. And that's why, I say that there's nuance in a lot of these reports, the economic data and also the earnings. We saw Tesla beat expectations, but it's still sold off, right? Why? Margin or profit margins compressed, right? We saw Apple, and I said this in yesterday's video. Look at Apple, right? A lot of people said Apple was too resistant to fall down, right? Apple beat its expectations, but when you actually look at it, a lot of its products actually missed on its expectations. Look at the iPhone. The iPhone didn't sell as what was expected. In fact, it wasn't too bad. But at the end of the day, a lot of individuals said, hey, Apple, too big to fail. It's very resilient. Apple is actually leading the trend downwards for the overall market. Apple has a huge weighting in the S&P 500, and so what Apple does pretty much has a huge impact on what the overall indexes do, right? And so while Apple was said to be too resistant, is actually leading the fall down. And so going into the next quarter, I don't think a lot of these companies that just recently beat their earnings and are still falling down, or may beat their earnings going forward. We already had Elon Musk give forward guidance that production was going to stifle due to factory upgrades, although I don't think that's going to be too bad for Tesla, because we have heard of some updates of factories were closed for such a short period of time for the upgrades, that we actually may have a surprise for Tesla in the quarter. So Tesla, we're still going to have to obviously keep paying attention to the data, but for a lot of these other companies that, not only, beat their earnings, but provided very bad forward guidance like Lucid, I don't think they're gonna do. They're probably gonna do worse going forward, and a lot of companies, even the profitable ones, they're gonna do worse going forward. Why? Well, I've been saying, a lot of these companies are hoarding labor. We saw that hourly or worker hours, right, are declining, right? Why is that? Well, employers are not yet just firing off their employees. They're keeping them. They're just giving them less hours. Now, I saw someone comment in a previous video saying that they're getting a lot of overtime hours at their job where they're at. But, at the end of the day, there's going to be a few exceptions. Of course, there's going to be companies that offer overtime. And some companies even offer unlimited overtime, right? And if you can, take advantage of that. I did that a few years ago. But anyways, going off tangent. We're seeing like a lot of companies, right, hold their employees. And so what we're either going to see is two stories. Either companies are going to fire their employees, which would trigger a recession, because the only thing stopping us from a recession is this robust labor market. People get fired. How are they going to go ahead and buy and consume to go ahead and grow the economy? How can someone buy a new Tesla when now they're out of a job and now they're just worried about how to even provide for their family, right? And so that's a big concern. But the companies, and you have to stay data dependent. This is why you can't have absolutes in the market, right? Because at the end of the day, things shift, right? And so what could also possibly happen? Well, a lot of these companies can still keep their employees, but they may, obviously see margins compressed. Now, we saw that a lot of the tech companies, they shed a lot of employees. We saw Meta earlier in the year, quite a few others shed employees, and that's a good thing with a lot of these tech companies is that they're actually able to do that. They have the ability to still shed off some of their labor force and still remain profitable. As a lot of these tech companies have high profit margins, and so they may still be able to survive by just shedding a few of their employees. But that's not the case for a lot of the other companies. And so that's something that we absolutely want to pay attention to. And so, if you're looking at Tesla from a long-term perspective, I want to see if Tesla does come down to these low 200s, does it start bouncing up? If it does, that's confirmation of the uptrend. That's when I want to buy more. I'm definitely not buying more right now as it continues falling down. Now, I know there's different philosophies when it comes to investing. Some people dollar cost average equally each month, and that's fine. I do that for some of the index funds that I invest in. I mostly invest in index funds. But for individual stocks like Tesla, I don't do that. I do lump sums. And so I'm just going to be seeing, well, if Tesla sells off and we see that bounce and confirmation in the long term, well, that's a time to add into my long-term portfolio. Now, if Tesla bounces up in the short term because of a positive CPI report, that's not a signal for me to add into my long-term portfolios. That's just very short term. Yeah, that's cool for a trade, but that's not something I see as a long-term opportunity. Now, if we saw Tesla continue going up and breaking above this descending trend line, well, yeah, then I'll reconsider and say I'll go ahead and add into my long-term portfolio. But keep in mind, you have to really separate trading and investing, short-term and long-term, completely different vehicles, and you have to understand your objective and what you're trying to do in the overall market. And that's why I have separate accounts. So in the short term, yeah, if we have positive data, along with these treasury yields continuing to decline, then that could pause push this idea of the market kind of going upwards in the short term. Still not believing that the market's going to break into new all-time highs and that we're full back on bull mode. I think we're still in a secular bear market. And so that's just my view. Now, you guys may disagree, and that's completely fine. In fact, if you do, let me know in the comment section below. I'll obviously be polite. It's okay to, have different ideas. I'll respect your thoughts on the overall market. I'm interested what you guys are seeing in the overall market. So let me know in the comment section below. I did see someone mention in the comment section that there is actually a gap right around over here. So yeah, that kind of shows us that Tesla can fall down and actually fill that gap. Now, do gaps always have to get filled? No, not all the time. But I'm going to end this video here as I was trying to do earlier. Make sure to watch this next video over here, and I'll see you guys on the next video. Take care.